Hey traders, back to another, not really a recap, because usually I do my recap after I close the trade. Obviously, in our trade club, I actually called the position from head to toe, from I take the position, how I manage it, how I hold it, etc. So I'm currently running a position, just thought of sharing with all of you what's my thought process, why did I take the trade, why was I able to be so patient to hold on to the position, and what was the confluence, the confirmation that I had. So if you, just for transparency purposes, the position is actually running 300k plus, and I just want to show all of you that we really did talk about the position in our trade club. So anyway, if you look at my Telegram, you can actually see that we took the position way before. You can actually see this was last week. Took the position, held on to the trade, and yeah, held on to the trade. And this morning at the peak, it was running. This afternoon, in fact, it was running about 4.5 R, then 5.5, and right now it's pulling back for a little bit. Yeah, so let's go back to my chart now, and let me just share with all of you. So first thing first, why did I look for mean reversion setup on gold despite the heavy rally? Bear in mind, I've been not shorting gold for the past long time. It was a long time ago since I last shorted gold, and it all began since, to be specific, it was since 22nd of April, where we noticed that gold was having a large V-shaped reversal. This is what we call a V-shaped reversal. And if I were to put on a replay, let me just ask all of you, anything before here, we were still extremely bullish. So we were still extremely bullish. It was until when price formed this right side of the V at 33.65. It was since then we started to look for a TPF setup. So TPF is a strategy that we use within our trade club. Basically look to hunt key turning points or mean reversion setup. So it was since then we started looking for short, and in fact I had my sell order here. I actually took 2 wins and 1 loss on gold before I took this short, and obviously this is one of the best, as I anticipate a much larger move to the downside. So if you can actually go back to my channel for more recap. So I shorted here and I covered the position at the low. So you might be wondering, so why on this short did I held the position much longer versus this one I had such a conservative TP target? This is what we call static TP approach. Main reason being, we are still fairly early to the seller's move. So anything up until this point, there was no evidence, there was no confluence that it was going to drop beyond this 32.75 support zone. So under that scenario, I would normally choose to have a static TP. In this case, long story short, the position I shorted there, that was my entry, and stop loss wise, it was right above this high, and I achieved basically a 3R target. So that was my first ever short position. Again, I've done a recap on my channel. Then I also took a second short based on a lower resistance entry, as we anticipated price to not revisit the TPF entry zone. Normally when we took a win, we simply did not expect price to revisit our initial entry, because if the downtrend is clear, it shouldn't go back. And my stop loss was again above this secondary high, and it was also I think, to be specific, my entry was here, stop loss was there. So I actually made another 3R, basically another 3R. Again, recap was already done on our channel, so another 3R. And there goes, fast forward, I also took 1 loss here based on the break and retest setup. So I took a short here around 32.7308. I still remember this specific entry, and my stop loss was roughly around here, above some of these minor high, and didn't work. It wasn't all beautiful. I took a loss on gold on the on the third entry, and at the same time I also took a loss, a 50k loss on my Aussie yen short, also based on a TPF continuation entry. On gold, it was a TPF min reversion entry. On Aussie yen, it was a TPF continuation entry. Why? Because the overall trend, we see it as a clear bearish direction. This is very different from gold, because if you look at Aussie yen, we are clearly on a seller's market. So we have low high, low high, low high, low high, low low, low low, lower lows. But if you compare this to gold, you can obviously see gold has a much first thing, range bound, or you can call it messy price action. Second thing, we are not mature enough to call it, the price action wasn't mature enough to be called an official downtrend, unless we see a major shift in structure, such as a break below this major swing high. Then that, if you imagine, would be a much larger reversal setup. So if you go back to Aussie yen, you can see that I actually took a loss here. I get stopped. I shorted at 91 point, nearly around 91.20, got stopped at for 50k loss. So back onto gold. This is my fourth attempt on gold. One massive trick or principle, or you can call it rule, that majority of you can apply, especially if you're struggling with consistency, is remember this simple sentence: if market is proving you right, don't imagine yourself being wrong. So what does that mean is, every time when I go short or if I go long on certain direction, and if market has been proven me correct, just like this one, I shorted once, correct, shorted twice, correct, shorted 3 times, I was wrong. But why did I re-short at 33.60? And why did I not go long here or go short there? It's because since the very beginning, the trade idea has been, I'm expecting gold to not push through all-time highs again. That was the first idea, the first thesis, the first logic. Second, I first shorted gold on 25th of April when gold was printing a low high plus a TPF formation at 33.60. So after seeing myself being correct once, the right thing to do will be, as long as price still fail below this 33.60, I'm allowed to reshort, because my initial thesis, which was here back in 25th of April, was proven correct. So in short, that was also why when price broke above 33.65, I told all of our traders, 400 plus traders inside our trade club, don't go short. Don't go long. Don't go long gold. Be patient. Let's see how price really react around this 33.63. Can we really push through? Even if it does push like this, you see, at a certain point, gold was pushing really aggressive. But I still tell all of them, don't go long, because price position was poor. We were approaching the all-time high. If you go long there chasing this kind of impulse, first thing, you're just having FOMO. Second thing, there was no clear evidence that this was going to continue pushing. And if price is sitting around all-time high, how do you assess your risk reward and stop loss placement? Remember, so that was the main thing why I told them, hey, we won't be taking any long, we'll wait and see if price do drop back below 33.65. And guess what? After I think it was 2 or 3 days of hovering, we finally come back below. And on last Thursday, our sell limit order gets triggered. Many of our traders also took the same trade. So we get triggered and we hold it over the weekend. When price pulled back deep from 32.75 all the way to 33.27, some of our traders actually got off the position, just to be honest. Some of them, after seeing price bounced off this support, they thought, hey, it was a bad signal. But I told them, and I personally still hold on to the position. And guess what? Monday gap down, and it was very close to my TP at one point, and right now it's still chopping around. But anyway, I shorted 30 lots on this one. If you do the math, I'm running about how many pips is that? So I always mess up with the pips amount on gold. So I'm running about 1,000 over pips on gold, and yeah, basically I'm currently up 300 over 1,000. That's it. So still holding on to the trade, not really moving anything, and yeah, I hope you all learned something new from this sort of head to toe kind of breakdown plus a recap. Not really a recap, as I'm still holding on to the trade. Stops are trailed, so stops are trailed at, let me check, so stops are trailed at 32.81 for now. So if price goes up, breaks above this zone at 32.73, I'm more than happy to get trailed down. I know, gave back some of the profit, but that's part of the probability game. So that's it for the breakdown plus the recap, just to share with you another 6 figures position. And yeah, if you like it, please don't forget to like and subscribe. Hope all of you learned something new, and I'll talk to you next time. Bye bye.